work, we feel that's the job of an NGO or government. But then what is social investment? We thought it's an oxymoron. How can an investment be social? On this note, I welcome all the panelists, and please feel free to ask questions. There is a raise your hand button on your screen. You can ask a question by clicking on that. Let me start with Sushma. When we talk about social investment, Aavishkaar is one fund which comes to our mind. There are very few organizations which are in socially inclined initiatives. How did Aavishkaar come into being, and what is your primary focus of investment?
Sure. Thanks, Varun. So quickly, I'll give a little introduction of who Aavishkaar is for those who are not, aware of the kind of work we do. So Aavishkaar is a early stage investor. We started business back in 2001. And that time our thesis of investment was more on identifying opportunities in rural India. And at that time, there were very few VC funds. Most of the opportunities were in large cities and metros, and that's where the crowding of capital was happening. And so we thought there were some interesting enterprises in rural areas that required capital that could be grown, and they could be good businesses on their own. So that's how we started. Somewhere between 2005, 2006, the word social investing or impact investing got coined, right? And it's not something that we started. It's just that we had identified a thesis, which was rural, which then moved to microfinance. We identified microfinance as a sunrise sector back then. Again, our investments were all thesis led, right? I mean, it was rural, small enterprises, financial inclusion, but globally, the word or the term impact investing got coined, and that's how we started being labeled, right? So now the question more is, so what is impact investing in the overall or the large scheme of things? Impact investing is basically investing in viable, sustainable businesses and business models. However, in sectors which normally are not the flavor of regular investors or who don't see it intuitively. Examples being financial inclusion, healthcare, education, agri-businesses. Of course, of late, agri-tech, edu-tech, health techs have all become the buzzwords. But back in the day, these were not sectors that came intuitively to many investors, right? So that's where it got coined as impact investing. So it's not so much an oxymoron because these were sectors that were identified early, which really made a difference to the large excluded vulnerable populations because there is they need to be served. They were underserved for a very long period of time. It was assumed that anything social had to be done either by the government or the citizen sectors or the NGOs, right? But clearly we have demonstrated that there are sustainable business models for investors like us who have to give market returns to invest in these kind of businesses.
Sure, and you very well mentioned that the term globally, it got coined as impact investment, and we have a global fund here, Arvind, managing India part of that fund. Arvind, what is your take on social investment? You have been quite active in this space from investment across Southeast Asia region, and I think more than 10 investments in India. What is your take on social investments? Can actually VC get some returns by investing in social startups?
Sure. So Varun, before that question, when you started, you said, can investment be social? So my question to you is, can there be an investment which is not social or anti-social? Unless, of course, you are investing in trafficking or gambling and all. So I believe long term, this, I don't understand the term or the way the definition has gone because I come from a very different background. Sure. This is my first, let's say, stint at development finance or impact investing. And when I joined this sector, honestly, I didn't see much of a difference, end of the day, because the end result everybody is trying to achieve is same. When you talk about private equity of the world, yes, they look for more aggressive businesses, and I agree with Sushma that when you talk about social or impact investing, you look at sectors that otherwise might not get the attention from larger PE players or global PE players. But then I believed in the long term, this line will get blurred, where, and when I say it get blurred, I meant PE investors jumping to this side of the fence, which to an extent I was seeing it was happening. There was big PE funds who were raising impact funds, billions of dollars. Then all of a sudden in the last 12 months, it went other way around, where social or impact investors started jumping on the other side of the fence, and which is where this edtech, fintech, agri-tech, milk tech, delivery tech, I don't know, just add tech to.
We just add tech to it now.
Yes. So to my mind, I think there is still some confusion, given the fact my background where I come from. Initially, I had a thought that things will get aligned, but it is getting aligned, but in a different direction. But yes, I agree that there is a lot of potential, and impact investing as such is a different domain which can make money, as much as what a PE fund will make. The only differentiating factor to my mind is, for example, we operate like a VC fund and we expect a return of a PE fund.
Okay.
That's the difference.
Okay. And when we talk about social in this country, so there's one corporate which definitely comes to our mind, which is the Tata Group. And we have someone coming from Tata Capital today. Mangesh, your entire experience has been in social space. I know you have worked with various organizations. How was your experience working with other firms and Tata Capital? Is Tata totally social inclined corporate, or they also expect some sort of returns? Like Arvind mentioned that we are a VC fund, but we expect a P return. So what is your take on, your personal take on this space, and what is Tata Capital's take on that?
First thing is Tata Group as such is well known to be by itself a large business conglomerate plus a social enterprise. I think primarily because we have a very long legacy, more than 150 years as a Tata Group. And Tata Group definitely has contributed a lot in terms of developing key institutions at the national level and some even globally, which are very relevant for the society. Now, specifically when we are talking about Tata Capital, in fact, I work for an entity called Tata Cleantech Capital, which is a joint venture between IFC and Tata Capital, the World Bank Group IFC. So it started. We started at a time when renewable energy or anything related to clean tech was at a very initial stage, and therefore most of our investments right now, if you see the kind of a portfolio that we are holding, is has been till now renewable energy, but now it's all like e-vehicles. So all those areas where the focus is on environmental returns. Of course, the commercial returns are there, but the focus is on environmental returns. Either there's a good energy efficiency that is leveraged out of our investments, or cleaning of water, cleaning of rivers. Namami Gange, there's a huge program by the government. So a lot of investments are supporting that particular program.
For example, Namami Gange, how will Tata Capital make money out of that? So Namami Gange might be a project where you just keep on putting money in and then expect no return.
No, it's not like that. There are a lot of cities which have comprehensive sewage treatment schemes that are basically private sector is involved in implementing those schemes, right? And the government, of course, pays them directly, but they have a gap between the flow of capital which comes from the government, and therefore we play in a role there.
Okay.
So, yeah. So basically, it's one is this particular idea of working in a clean tech space where we are focused on the environmental returns, uh, uh, alongside with the commercial returns in all the investments. And second important factor is Tata Group as such has a vast in terms of outreach, in terms of the social sector, what it does through its CSR programs. Historically, when CSR term itself did not exist, what all they did in terms of developing IISC, TIFR, the Cancer Institute, all this. So using that, we want to leverage it further to get into the social space more actively. But right now, I mean, till now, our focus has been primarily on leveraging the environmental returns uh, for all our investments.
Sure, sure. One interesting thing, Bhavesh, I would like to share, and then I'll take your view. So when we were kids, we used to go to school, and we always have a different perspective about schooling, education, and then there is a full wave of VCs coming into India, considering education as an investment space. Now here we have CBA Capital, where education is a full-time investment criteria for them, but with a social element. So how are you clubbing the social element to education space?
Sure. Thanks, Varun. So, probably adding on to what Arvind said, more relevant for education space. It's difficult for me to see education really as non-social, non-impactful in any which ways. Even if you take different stratas of the segment that is being reached out to. So from the high-end schools to the government schools, I guess the impact is so very evident that I think there was never a doubt that this sector is actually important for the country and the world actually to grow from where it has actually reached. But then yes, things have changed. VC investors, mainstream investors coming in has changed the game a bit. But in India, at least, this still remains a heavily regulated sector. Government has still got substantial ownership in this whole I think ecosystem whereby they own really the land for all the schools, all the universities, and therefore there is a partnership between the government and now private players emerging, which is changing the game where the private players are actually bringing in all the innovation at a pace which is actually unprecedented and has seen in the last 15, 20 years. So when CBA came into picture, just, I think in 2013, the idea really was to look at a sector which does have impact, but is also really almost new for the investors to actually participate and add value. We chose education along with livelihood and skilling, where we thought the investment was I think extremely important for the growth of the society's growth, the economy's growth, by getting really the right and educated and skilled resources available when they move to the mainstream economy. So things have really, I think, changed as we also spoke about tech, playing an important role in the last 5-7 years. So we see tech as given and an enabler. And then whatever you bring to the table in addition to the tech is what actually ends up adding value. And this whole ecosystem is going to complete change with private participants, private capital, and government actually coming together to take this to the next level. If you actually had a chance to look at the draft education policy that has come out, again, there the intent really is to bring all these private and public players together so that there could be convergence in terms of both quality and also really the kind of returns, whether it's social or commercial returns, that all parties involved would expect comes out. So I guess we're moving in the right direction, but things have changed with I think technology and more capital being available. and we see this as a very interesting space from here on to continue working on. So yeah, that's how it's.
You have touched upon a very interesting discussion point now. You mentioned the sector is highly regulated in India. And let me go back to Arvind now. Arvind has exposure to invest in Nepal, Philippines, Indonesia. Arvind, what is your view if you go and find a startup outside India in a country like Nepal versus you find a startup in India? Do you see the other the policies by other countries are more conducive towards social investment, or India is actually at par or better off?
Yeah, I would. I mean, there's two way you answer the question, because if you say it's more conducive, yes, because the policy and regulations are not that strict. But it might work in your favor in the beginning, right? I'll give you an example. In India, as a foreign investor, it's not easy to invest in debt, right? You have to go through ECB norms, and which is a cumbersome process. And when we are investing in Indonesia or Philippines, then you can do a foreign debt very easily. So there, making the investment becomes so easy. But then as you go forward, because of less rules, regulations, it becomes a nightmare. So I would say India is much ahead in terms of policies and regulation to protect the local players or the local economy or the infrastructure. Because otherwise, I see a lot of investments in these countries where regulations are not very strict, where most of the time either of the party is a loser. So I would say we are much ahead.
Okay, very, very interesting. And Sushma, Mangesh touched upon a point where the big corporates use their CSR policies or CSR funds to invest in different. One very interesting thing which Mangesh mentioned was Namami Gange platform. How is Aavishkaar trying to do, and what is Aavishkaar trying to do different from what other big corporates are trying to accomplish via their CSR policies?
So, Varun, Aavishkaar as an impact platform is slightly different structured. As a group, we have multiple businesses. One is, of course, the fund business, where we invest in for-profit businesses, and it's akin to any VC firm that's around. The other businesses also are, we have an advisory business, which helps the whole impact ecosystem in terms of consulting, fundraising, and other transaction services. We also have a couple of debt arms, one MFI and a SME lender. The focus across the group is the bottom of the pyramid, or how we term it, the economically active segment in the bottom of the pyramid. Right. So to that extent, we are slightly different. We don't do CSR activity per se, or we don't invest in not-for-profit businesses, because that's not the business that we are in. However, we do look at partnering with such players wherever required. So one such example is we had invested in a toilet company, which is one of the largest toilet companies in India. I know it's not a very cool business to be in, but it is clearly a requirement. And especially when we had invested.
How will you make money out of that?
Sorry?
I will be interested to it will be interesting to know how will you make money out of that.
We already did. So we've already exited it and we've made our money.
Okay.
And we had invested much before this whole Swachh Bharat program came in, right? So clearly open defecation was a huge challenge even before Modi recognized it as a challenge. And so we had invested in these mobile toilet companies where the biggest problem was A, there was lack of infrastructure, B, there was no one willing to clean it. There was no civic understanding that, oh, we do need clean toilets for our own health. So there was this very interesting entrepreneur who started it in Pune. The whole business model was to provide mobile toilet facilities in urban slums, in real estate projects, in large event facilities. clearly makes a lot of sense. It was it could be a boot model, which is build, operate, and transfer model, or it could be that a rental model where he sets up his toilet booths for a pay-as-you-use kind of a model. Fantastic, right? I mean, it makes sense. People were understanding the need for something like this, and it did quite well. It was a profitable business, and as I said, we exited it profitably as well. So these are the kind of businesses that we invest in. We avoid investing in businesses that have too much reliance on government, because the kind of it creates a lot of cash flow stress in government focused businesses. We faced that problem in one of the water treatment plants that we had invested in, and it was early on in our evolution, and very quickly we learned from that. Clearly, water treatment in rural areas and in the non-metro areas is a huge challenge. There's no potable water available. And so there was this water treatment plant, again, set up on a pay-as-you-use kind of a model. People were willing to pay for clean drinking water. However, government intervened, saying this is a role that the government needs to pay. And so they took over those facilities, saying that we will pay you a rent and you manage it. But as everyone knows, government cash flows tend to be a little more, volatile. They are not like a Tata corporate who, meets their commitment. And so that's where that company suffered. And so after that, we kind of, are a little shaky on government-reliant projects.
So this is again, Arvind feels that we are better off in comparison to other countries. And here we have your experience, and then Mangesh has experience like Namami Gange, which I'm thinking, so a lot of government, maybe a bureaucracy, red tapeism or policies would have actually stopped you going forward. Mangesh, did you face any issues from the government side? Like Sushma said, some issues they faced. Arvind never faced any issue, but Mangesh, did you face, or actually Tata brand really helped you?
Okay. I think the Namami Gange project is quite an evolved kind of a business model or a PPP kind of a model that has come out. It's almost the same as the way our highways are being built through the hybrid annuity model. Okay. So, and there's been a plenty of structuring done on the PPP modeling of it by IFC, that is the World Bank Group. So all such risks and allocation of risks and who would basically take responsibility of which kind of risk is quite clear in this model. Yes, but still, in spite of all this, we did watch this sector for a while before we started investing in it. I think they are generating good returns for us right now.
It is like a seamless journey for you at Tata Capital.
Yeah, in fact, it's natural. Every new sector or anything related to government are going to have several challenges, but that's something which part of our DNA, in the sense we've been into almost all sectors. So, and we have since as a group, as a conglomerate, we have businesses in almost every sector. So we also have a lot of learning within the group as to before getting into a new financial investment. We can have a advantage of learning from our group companies and then getting into the investment.
Sure. Bhavesh, I come to you. So when you go to your investors to raise money for your own fund, how do you convince that, okay, here is one sector which I will be focusing on, and then there are numerous VCs across the country who are not necessarily focusing on social investment. Do you find any challenge in actually convincing your investors or convincing some sort of stakeholders in your whole journey in investment?
Well, Actually, it works the other way around. Most of the investors that we have are really institutional investors that recognize the impact returns equally, if not more so, when we look at the overall offering. And therefore, even if you don't bring that to the table, that's really something that gets asked even in the first or second meeting that we might have with prospective investors. So for institutional investors, actually, it's given. For HNIs and other, I would say, segment of investors, they're also warming up to the idea. They recognize the, I think, positive returns that are brought about by many of these sectors where we exist, and these businesses are doing actually wonderful jobs. So those investors are also now probably more warmed up to the idea that these sectors do create social positive returns, and also they are capable of generating decent and good I would say commercial returns as well. So it's not really a challenge. In fact, it works quite well when we talk about our investee companies and are able to demonstrate that, well, because of these social impact matrix that they were following, these subsequent rounds that they raised, they eventually managed to get a better, let's say, valuation, better investors, and that's how I guess all the investors are also looking at the social impact returns that I guess all these funds are really also trying to generate in addition to the commercial returns. So really don't see a challenge. It's actually only a positive from here on. If I were to look at probably 10 years ago, yeah, things would have been slightly different. You would have actually had to defend and make more effort. But today it's almost given for a fund like ours to have those kind of matrices in place, demonstrate positive impact, and yeah, I think so. It's definitely going to only help us when we go to the investors.
Sure. And one more question. This is open to all four of you. How do you really measure the impact? So financial returns, we have different financial ratios. Do you actually follow some sort of social ratios or impact ratios? Arvind, maybe we can start with you. So do you really have a metrics in-house that you measure the social impact and then you take a decision?
We do. So, whenever we look at a company, apart from the financial plan or the financial projection, we also identify anywhere between 5 to 10 social metrics, which are usually coming from iris indicators. So we pick and choose basis, the sector the company is operating in and specific to the company. And apart from the financial projection, we also have a projection for the impact matrix. And on a quarterly basis, annual basis, we monitor both. Now, what we have not been able to do, I'll be very honest with you here, and this is a question which is asked often by the companies. Let's say a company which has an intended impact of sourcing directly from farmers, and in the next 3 years, they want to source from 1,000 farmers. And at the end of third year, they have sourced from 1,500 farmers. And they're obviously, if they're sourcing from more farmers and the business is also growing. Now, 2 years, 3 years from now, they need to raise money again. And then we get into the discussion of valuation. How would you monetize that social enterprise in terms of pricing because of the impact they have achieved? And that's a question they often ask. And you can indirectly take care of this issue, but is there a direct way of making somebody satisfied that yes, this is the pricing for your financial strength of the company or the future projection, and this is the price for what you have achieved or what you intend to achieve? I think that's where the main challenge is for us, rather than identifying impact metrics and monitoring it.
Okay, and Sushma, how do you quantify the impact?
Sure. So we also have quite an extensive impact measurement mechanism that we put in place. In fact, every year Aavishkaar comes out with an annual impact report. So similar to how we come out with a financial report, we also come out with impact reports where for across our portfolio, we've distinguished between fund impact and portfolio impact. So when I say what fund impact we're doing is obviously for every dollar that we have put into a company, there is a certain impact in terms of employment that has been generated, or in terms of livelihoods that has been created. But then the second order impact is actually being created by the portfolio companies themselves, which is, like as Arvind mentioned, sourcing directly from farmers, enabling supply chains, environmental impact, in clean environment, social impact as well, in terms of creating a socially strong model. So we measure all of those, and in multi-stages. So at the time of investment, similar to how we apply financial filters, we also apply impact filters. When we first see the deal, we first need to see whether it meets all the impact requirement before we move forward in evaluating the financial fitness of the company. And as we go forward, also we do extensive audits on the impact requirement. But as Arvind rightly pointed out, unfortunately, while there's so much good that these businesses are doing in terms of the ESG impact, the environmental, social, and governance impact, there are not extra credit points available for these companies, and the follow-on investors, who are typically your mainstream PE investors, tend to put the same financial filters when they are evaluating these businesses, which is rather unfortunate. And so that's where, when the large PE funds who are now focusing on impact are coming in, and there are billions of dollars being raised globally for impact as a theme, I think that that issue will be resolved sooner rather than later.
Okay. And Mangesh, do you also use some sort of ratios to measure the environmental impact, or it is just based on maybe some CO2 levels or some PHP levels?
I think we've gone through almost the same journey which Sushma slightly elaborated on. But right now, I think the localization of the sustainable development goals that has been done at the national level are the primary indicators that we use in most of the cases.
Okay, sure. And Bhavesh, do you use number of students finally got educated, or any other metrics do you use?
Yeah, I think number of students, number of schools. So I mean, each investment would have slightly different metrics, but yes, broadly the lives, touched, affected is what we would broadly try and measure. And we spend enough time actually even before the investment is made to align the company's overall objective and align that with the social impact matrix that we have as a fund mandate, and what we believe could be achievable in that particular investment before we make the investment. And periodically do evaluate given these are all early stage startup companies where things are changing rapidly, there is a need to work with them on a frequent basis to revisit these matrices as well. But yes, at the outset we do come up with matrix along with the company, so that there's no confusion on how to measure that.
So before we move forward, we pick up some questions from the participants as well. So Florian has a question. Manan, can you please unmute Florian, and then the question can be asked?
Yeah.
Yes, please ask your question. Manan, you haven't unmuted.
I have. Florian, can you ask your question?
Oh, yes. Hello. So sorry about that. Hi, everyone. My name is Florian. I work for the Swiss DFI. OBM, we manage the investment fund for Switzerland. I think I know some of you on the panel today, and I'm very happy for this. My question is, in a post-COVID world, and what we see, I mean, here in Europe, what's changing in India, how are you going to probably change the way that you make investments or look at investment opportunities in India in the next 12 to 24 months? Will anything change? Will your strategy change? Or will everything just remain the same and you continue as business as usual? But it'd be great to hear your view. Thank you.
Sure. Varun, is it okay if I go first? Yeah. Hi, Florian. So to quickly answer your question, in a post-COVID world, we strongly believe, and this is the house view at Aavishkaar as well, is that impact will be the new mainstream, right? Because clearly one has understood, especially after looking at the problems that we are facing in India with migrant labor, vulnerable communities who have been very badly affected by COVID, that it's important to take care of the entire of that particular segment of population as well. It's not right to ignore them, because if you do, there are repercussions that the society has to face. And so now we are seeing that even the large corporates and large investors are sitting up and taking notice, and they're quite fearful of what the impending damage and the second order damage could be to their enterprises if we don't take care of all segments of society. So impact is definitely going to be the mainstream now. People are going to focus more on those businesses that manage these segments as well. So coming back to sectors, financial inclusion, agri-businesses, so rural has come out to be one of the most resilient areas in our country today. And those businesses that are going to be rural focused have emerged resilient. So focus is going to shift there significantly. Digital transformations are happening. Digital adoption is happening at a much faster pace. And India is probably ripe to tap into that, because we have a very robust infrastructure for that, or from the payments to the telecom infrastructure. I think we are quite far ahead when it comes to digital transformation. So we'll see a lot of changes and technology-enabled businesses focused on whether it's farming, agriculture, disruptions in supply chains. These will be emerging things that now investors like us will start shifting focus to.
Sure. Florian, does that answer your question?
Yes, thank you very much.
Okay. Next question is from Anurag. Manan, can you please go ahead and unmute Anurag? And the question is also a very interesting question.
Hello.
Yes, Anurag, please ask your question.
Hi. So yeah. So my question is that how do you see the role of impact bonds and social bonds affecting the social impact environment? So yeah.
So are we talking about social bonds or impact bonds? You mean how the debt market will operate in this space?
So like globally, there have been some social bonds created, and some new models of impact funds and impact bonds have been suggested. So the idea is that some impact is proposed, investor puts in the money, and if that impact is delivered, then government pays for that, pays back the investor after some time. So
Sure.
how are these models? How do you see these models?
All the panelists make equity investment, so I'm not sure if someone from the panelists can take up this question. Maybe.
Varun, I can take a crack if you want.
Sure, please go ahead. Thank you.
Sure. So yeah, see, impact bond has been there for some time. I mean, I remember when I joined the sector, there was a lot of discussion on impact bond. My personal opinion on the impact bond has been there are few sectors, few problems that can be better solved through impact bonds, and that will happen. Be it in the education, be it in the sanitation, you will see a lot of such initiatives, because it's a multi-stakeholder involving the government, private sector, and third parties. If you talk about social investing as such, the type of structure we have in terms of impact investing, or the funds which we have, I don't think, at least to my personal opinion, that impact bonds would play a greater role. But yes, there are sectors and there are some problems where the impact bonds will have an increased presence, as we have seen in the past.
Okay, thank you. I have another question.
Yeah.
So although there are some social impact metrics like GEN, IRIS, and some like Social Value UK. So I just wanted to understand how do you all like see whether there's a consensus in terms of social metrics in the industry. But for example, for financial metrics, we have GAP, right? So that ensures that every organization has a standard, way of accounting and reporting, right? So do we have such a similar sort of consensus in terms of social impact measurement also?
Sure, I can take that.
Sure, Bhavesh.
So, Anurag, hi. See, I think we are in still quite a nascent stage to really have an evolved framework which would work really for all sectors across the globe, unlike accounting standards and all that you spoke about. But having said that, more and more development financial institutions and many government agencies are working together to come up with a framework which would broadly work for each sector with some tweaking across the globe. UN SDGs is one such example, which if you go through, will give you a broad framework within which most of these sectors, would be able to, I guess, continue working and also be able to, have a more standardized kind of matrix that they can actually follow. But we're still in early stages. I think we're at least another 4-5 years away. Only after that, I expect a more globally acceptable kind of a framework coming out. But we are definitely in that direction, and there has been a lot of progress made.
Okay, thank you.
Okay, I want to understand how does the valuation work in this space. So is it possible for you to share at least one case study, one live case deal from your portfolio companies? How did you value that particular business? So I'm not talking about the valuation methodology here, as in what parameters apart from the regular financial ratios did you consider which arrived at some sort of a valuation before putting in money?
So Varun, if I were to quickly take a stab, as I mentioned, we are a regular VC fund, right? So we apply all the regular financial metric valuations when we apply valuations. So I leave it open to the other panelists if they have anything unique or different in the way they evaluate.
I know Arvind's portfolio companies, many of the portfolio companies, and they are all from logistics to generation of women employment. Maybe Arvind, I would actually want to understand how did you value Miracle Courier? Maybe if you can share some bit of background on Miracle Courier. It's a very, very interesting company, and I'm sure it would have not been easy for you to value that company.
Sure. So Miracle Courier, as the name suggests, they are a last mile delivery service company currently operating in Mumbai and Pune. And they mainly hire people with disability. So most of their delivery people are people who are deaf and mute. And now the expansion in Pune, where most or all their hiring is done from community who are disabled. So these people might not be deaf and mute, but here the way process is set up where you need to have a delivery center inside the premise. So there we have women who either don't have a leg or hand. Over time, what we also did is we started making it more inclusive. So now we have around 50-50 split between people with disability and people who are not disabled. Now, that's a very good question, Varun, and I told you earlier, that's the biggest challenge currently I have, that how do you give a valuation to
you can't apply a regular industry multiple there, right? There are people with some disabilities.
Sorry, come again?
I'm saying you can't apply a regular industry multiple in such cases, because if someone is dumb, someone is deaf, or someone doesn't have a limb, versus a startup which is working in the same sector but with a full able team. So how did you justify that to the startup that this is the right valuation for you?
Yeah, see, that's the thing. So there are two sides of it. One, I believe it's a challenge. You can't actually put a number when you evaluate such type of impact. The second, if you start differentiating these companies yourself, end of the day, these companies will have to compete with another big last mile delivery company in India. And if you yourself is differentiating in terms of how you used to value, how do they make profit, and things like that, then I don't think you are doing a service to yourself. And my whole investment philosophy behind these companies have that you look at a societal problem, and if you come across a business model which is woven around that societal problem, and because of that uniqueness, you are able to solve one or two present problem in the sector, then you are going to be winner. So that's how you can go about it. But if you start differentiating, saying, oh, 50% of the people here are disabled, so if the valuation should be X, I'll give them 1.5X. Market will eventually correct themselves, right? There will be a point in time where it'll get corrected. Markets are very smart, than what we think. They will correct. And you might do a disservice, because I have seen cases where you might have given a very high valuation or a very low valuation, and both are detrimental. A low valuation means a lot of valuation for the promoters, and future fundraising becomes difficult. A high valuation, you go for next round, and 80-90% of the prospective investor will wave hand from far, because valuation is too high, and they know the discussion is going to be very difficult. It's a very difficult topic, and you need to be very careful. In the short term, you might see as a winner, as a company, or as an investor. In long term, you should not lose out.
Mangesh, did you face any such challenges in your portfolio companies where valuation became a difficult thing, or you wanted to use some other metrics to value your company?
See, in our case, we are primarily in kind of sectors where I think we are more of environmental returns that need to be looked into, right? So, and I think we hardly have any portfolio company which has social returns in place. So in case of environmental returns, these are more of physical parameters, energy efficiency, and what's the impact of infrastructure created, or the environmental benefit created, or the CO2 difference, the energy savings, and all. These are pretty much cut out based on scientific principles, and we don't see any conflict there.
Bhavesh, did you face any issues, or what metrics did you use to value such companies?
So really, I think we almost go in as the first institution investor where there isn't too much that has already been done, and therefore we work with the companies to come up with those matrices and the path for them to actually grow. So what we have experienced is in the follow-on rounds, when the company actually goes and raises capital, there are it's not that they command some positive or extra points for it, but they definitely don't get any negative points for, let's say, not having few of those things in place when they reach out to I think institution investors who probably would have the mandate of creating some kind of social returns as well. So that's how it helps. You can reach out to a certain segment of investors in your follow-on rounds once you have the business growing. But yes, it's difficult to put a number to it today, given that it's very difficult to actually even quantify in terms of numbers the social returns that any of these companies are actually generating.
The beginning of conversation, Arvind, you mentioned, tell me, Varun, which startup or which business is there which is not social. But I will still stick to that. There are certain businesses which are social per se, like financial inclusion. Did you face anything where you felt a startup will die and there's a time to change the model from social to maybe for profit making for sure model? Like all four of you are investors. So did you actually push your portfolio companies to move from the social model because you wanted them to survive?
Yeah, before that, Varun, I mean, you said to move your companies from social to profit making. I don't know why you said that, because all our companies are profit making.
For the lack of better word, social.
Exactly. Anti-social, you could have used. Did you change any of your companies from social to anti-social? So no, we didn't change any company from social to anti-social, but we did had to change business model where either the impact intended was made different, or it was made less social. So I can give you an example where one of our company, which is in the agri space, and this is not India, they were really struggling in terms of the output production for their land. So they were using 100% organic, and the production ratio at the field were around 30%. And they were struggling really, really hard. So they were struggling to make profit because the production was not going up. So they had to switch from organic to inorganic. And then the production went up and the company is profitable and doing very well. So it's not like they now are using tons of pesticides and all, and they don't care about what everybody's eating, but they are not certified organic now. So these type of changes we had to do, and I think this is part of any business. But would we get into? There is another example where the sector is known for adulteration, and the business which we were invested in, they are still struggling. They could change overnight if they start adultering at the acceptable level which is there in the sector. But day one, they said, we will never do that. And none of the investors forced them. Even today, they're not doing it. They might as well shut down in 6 months. So that's a price we will pay. But I think these are some of the tough challenges you need to take. Also, to add, Varun, to the previous discussion, see what we have been able to do in terms of impact, and I think that's a start. And that is both at our fund level and at the companies where we invest. In our fund, we get our carry interest. So the percentage of carried interest is dependent on the impact we create. So now when we say impact we create, then you can't have 10 impact matrix to measure because it's very subjective. So basis our investor, we agreed on one impact matrix, that is investing in women entrepreneurs. And if we don't achieve that minimum threshold, our percentage of carried interest which we can get as a fund manager starts decreasing. It goes down.
That's
one. Secondly, what we also do, Varun, at the investee level, where there is a lot of time these, the valuation becomes a challenge because of the discussion which we are having. What about the impact? What about the social ethos? So we a lot of time go with a convertible instrument of a CCPS and all, where we say the conversion are dependent on two aspects. One, the business plan achievement in the next few years, so whatever is the timeline, to the impact achievement. So it's a mix of both the metrics where the conversion price is determined tomorrow, or it's a lower of the next round. So that's a win-win for everybody. So I think that's a start we have been able to do at both our fund level and our investee level.
That's quite informative, Arvind. We are at the end of the session, but as you know, many students are also part of this conversation today. Sushma, there is a question from a student that what if they want to make their career in social investment? What should they do? Students coming out of colleges or B schools, how can they make career in social space?
Sure. So my advice to many of the students who approach me as well is sometimes there's a little misplaced view on what social investing means, right? Most of the students who come out of college want to change the world and they want to be the catalyst for that change, and they think it's like just by putting in the hours things change overnight. Unfortunately, it doesn't work that way. You really have to go to the field and work with different stakeholders. It is not as easy as it looks. So my advice to most students would be is actually go and understand what social is, what impact is, and then get to what investing is, right? So even if it means interning in different places, identify those causes that are close to your heart that you want to associate yourself with. Go for short-term assignments, see whether that resonates well with you, and then moving into making it a career prospect then would be far more easier.
Thank you so much, Sushma. So with that note, we'll have to put an end to today's session. And I thank all of you for taking time out today, and looking forward to hosting you again. Best wishes. Stay safe. Stay healthy. Thank you so much.
Thank you,
Thanks.
Varun. Thank you, everyone.
Thanks, Varun.
Thanks
Thanks for
everyone.
having us. Cheers. Bye.